Hello students, in this class we'll discuss the determinants of working capital. Determinants of working capital means the factors which are influencing the working capital. Without all these factors, the working capital is not able to study or it is not able to work. Okay, so these are the most important characteristics or nature of working capital or the factors which are important in working capital. Okay, so the first one is nature of business. Second one is size of business operation, manufacturing cycle, product policy, volume of sale, term of purchase and sale, operating efficiency, price level changes, business cycle, processing technology, fluctuations in supply of raw material. So these are the factors which are influencing on working capital. So the first one is nature of business. Working capital requirements are basically influenced by the nature of business of the firm. Means the nature of business will affect the working capital. Whether the business is large or the business is small, the the size of the business will decide the usage of working capital. In trading organization, there is a force to carry large stocks of finished goods or accounts receivable or account payable. In trading organization there will be a large stocks, whereas public utilities require lesser investment in working capital. Means in trading it will be a large working capital, in public utilities it require lesser working capital. So the size of the business and the nature of the business will affect the working capital. So this is the first point, that is nature of business. So nature of the business is the main in working capital. Whether the business is big or the business is small, it affects the working capital. Next, the size of business operation. As I said, the size of the business will affect the working capital. If the size of the business is large, then the large amount of working capital will be used. If the size of the business is small, then the lesser amount of working capital will be used. Size is measured in terms of scales of operations. Normally, a firm with large scale of operation require more working capital than a firm with low scale of working capital. So the size of the business operation is measured in scale. Okay, so this if the scale of working capital, if the scale of our operation in business is large, then the large amount of working capital will be used. If the scale of the business is small, then the lesser working capital will be used. Okay, so the size of the business operation is also the important in working capital. So first one was nature of business, second one was size of business operation. Next one, manufacturing cycle. Capital intensive industries with longer manufacturing process will have higher requirements of working capital because of the need of running their sophisticated and long production process. So the manufacturing cycle will affect the working capital. If there is a longer process for manufacturing, then there will be the higher amount of working capital. If the manufacturing process is small, then the small level of working capital will be used. So manufacturing cycle will affect the working capital. Larger the manufacturing cycle, the larger will be the higher will be the working capital. Lower the manufacturing cycle or the shorter the working capital or shorter the manufacturing process, then there will be shorter working capital. So manufacturing cycle affects the working capital. Next, products policy. Production schedule of a firm influences the investment in inventories. A firm exposed to seasonal changes in demand that follows a steady production policy will have to face the cost and risk associated with inventory accumulation during the off-season periods. On the other hand, if the variable production policy will be facing different dimensions of management in working capital, such a firm has to effectively handle the problem of production planning and control associated with utilization of installed plant capacity under conditions of varying volumes of production of products of seasonal demand. Product policy means every product will be having a policy. Okay, so to produce it means there will be a fixed amount of investment and the fixed amount of profit. So product policy, beyond the use of product policy in the business will affect the working capital. Next, product policy means there will be a specific amount of investment will be decided on the product, and there will be a specific amount of standard of profit will also be decided before the business has is been started. Okay, so the profit will be planned. Okay, so that profit, if it is not achieved, then they will consider the business as there is a loss. Okay, so in product policy there will be the profit will be set, and that profit should be and must be achieved, or else the business organization will be in loss. Okay, so this product policy will decide the working capital. So next is volume of sales. There is a positive direct correlation between volume of sales and size of working capital of business. Okay, so volume of sales, the size of sales will also affect the working capital. Okay, if the size of sales is increased, then the working capital will be required in the higher amount. If the size of the sales is decreased, then the working capital will be required in the decreased manner. Okay, so volume of sales is also the important factor of working capital. Next is term of purchase and sales. The firm that allows liberal credit to its customer will need more working capital than the strict credit policy. The firm which enjoys liberal credit facilities from its suppliers requires lower amount of working capital when compared to the firm which does not have such a facility. Okay, if the firm gives credit to the customers, then there will be more production and there will be more sales and there will be more working capital required. Okay, so if the firm does not give credit, then there will be lesser production and lesser sales and lesser working capital required. So if the firm is giving credit facility, then there will be more working capital required. Okay, if there is credit facility, everyone wants to buy. If everyone wants to buy, then we have to produce so much. Then if we have to produce, then we have to get a working capital in higher way. But we are not getting amount, it is on credit, so we are not getting amount for that. So there will be a misunderstanding in this thing. So the term of purchase and sale will also affect the working capital. Next is operating efficiency. The firm with higher efficiency in operation can bring down the total investment in working capital lower levels. Here, effective utilization of resources helps the firm in bringing down the investment in working capital. Operating efficiency will also affect the working capital. The firm with high efficiency in operation can bring down the total investment in working capital to lower levels. Here, the effective utilization of resources helps the firm in bringing down the investment in working capital. Okay, so operating efficiency will also affect the working capital. Next is price level changes. So inflation affects the working capital in the firm. To maintain the operating efficiency under the inflationary setup, a firm should examine the maintenance of working capital position under constant price level. The financial capital maintenance demands a firm to maintain higher amount of working capital, keeping pace in rising the price levels. Under inflationary conditions, the same levels of inventory will require increased investment. The ability of the firm to reverse its product's price and rising the price levels will decide the additional investment to be made in maintain of the working capital intact. So the price level changes will also affect the working capital. Price level changes means inflation or deflation will affect the working capital. If I am reading so much, then you don't get confused. Okay, so if you read it once again, then you will also get to know everything. Okay, so the next one is business cycle. During boom means it will be a higher. Okay, higher, boom means higher. During higher, sale rise in business expands. Depression is marked by the decline in sale. During boom, Expansion of business can be achieved only by augmenting investment in various assets in the constitute working capital of the firm. When there is a decline in business on account of depression in economy, the inventory glut forces a firm to maintain working capital at level far in excess of requirement under normal condition. So the business cycle, in business cycle, the, as you know, you can know the product cycle, right? So there will be a growth stage, maturity stage, saturation stage, and decline stage. Okay, so in business cycle also there is like that. So in the higher position or in the maturity stage or saturation stage, the working capital will affect. If the business is in declining stage, then working capital will be changed. If the business in maturity stage, then the working capital requirement will change. If the business is in the maturity stage, declining stage, saturation stage, so the business cycle will affect the working capital. So in this point we are seeing what all affects the working capital. These all points are affecting the working capital. Okay, so the next one is processing technology. Longer the manufacturing cycle, larger the investment in working capital. When raw material passes through several stages in the production, process of work in process inventory will increase correspondingly. Then it means the manufacturing cycle we have read in second point. So manufacturing cycle will affect the working capital. If the manufacturing cycle is higher, then there will be a higher working capital. If the manufacturing cycle is lower, then there will be a lower working capital. Okay, so next one, fluctuations in supply of raw material. Companies which use raw materials available only from 1 to 2 sources are forced to maintain the buffer stock of raw material to meet the requirement of uncertainty in lead time. Such firms normally carry more inventory than would have done had the materials been available in normal market conditions. Fluctuations in supply of raw material. If the raw material, if the company is taking raw material only from one source, then the coming of raw material or the intake of raw material will affect the working capital. Okay, so all don't get confused. All these points are the points which affect the working capital. Okay, if you read it once, you will also know it properly. So these are all the points which affect the working capital. With changing all these points, the working capital will also be changed. Nature of business. In nature of business will affect the working capital. Next, the size of the business operation. The size of the business will affect the working capital. If the size of the business is large, then the working capital will be used in the higher level. If the size of the business is short or small, then the working capital requirement will be in the lower level. Manufacturing cycle. In manufacturing cycle, if the manufacturing process or the manufacturing cycle is big, then the working capital requirement will be higher. If the manufacturing cycle is small, then the working capital requirement will be in the lower level. So manufacturing cycle will affect the working capital. Nature of business will affect the working capital. Size of the business operation will affect the working capital. Manufacturing cycle will affect the working capital. Next, products policy. Next, volume of sales. If the sales are higher, then there will be manufacturing more. If the manufacturing is more, then the working capital will be more. So volume of sales will affect the working capital. Next one, the term of purchase and sale. If the firm is giving credit facility, then the working capital will be higher. Okay, if the firm is not giving credit facility, then the working capital will be smaller. So the term of purchase and sales will also affect the working capital. Next, operating efficiency will affect the working capital. Next, price level changes will also affect the working capital. It means inflations or deflations in working capital. Next, business cycle. In business cycle, at every stage of business cycle, there will be in business cycle there will be production stage, maturity stage, saturation stage, declining stage. So in all the different stages, the working capital requirement will change. It will fluctuate. Okay, so business cycle will affect the working capital requirement. Okay, next is processing technology means the processing process, that is manufacturing cycle. So manufacturing cycle, if the manufacturing cycle is large, then there will be a higher amount of working capital. If the manufacturing cycle is low or the manufacturing cycle is small, then the lower working capital will be used. Okay, so next point was fluctuations in supply of raw material. If the raw materials are supplied in a proper way, then the working capital will be at that stage. Okay, so these are the factors determining working capital. So in this chapter we have seen the what is working capital, the meaning of working capital. Working capital is the short term fund which is required in business organization. Okay, so the difference between current assets and current liabilities is working capital. The changes in current assets on current liabilities, or the managing the current assets and current liabilities, or the balancing between current assets and current liabilities is called working capital. So we have seen the types of working capital, which was first one was permanent working capital, regular working capital, reserve margin working capital, variable working capital, seasonal variable working capital, special variable working capital, gross working capital, net working capital. Okay, see, these were the types of working capital. The most important were gross working capital and net working capital. As you all know, gross working capital is the total of current assets. Net working capital was the difference between current assets and current liabilities. Okay, once again, gross working capital was the total of current assets of the business, whereas net working capital is the difference between current assets and current liabilities. Okay, so these were the eight type of working capital. So next one we saw the features of working capital. So next we saw the determinants of working capital. So in this determinant of working capital, we have seen the factors which affect the working capital. The nature of working capital will affect the working capital. The nature of business will affect the working capital. The size of the business operation will affect the working capital. Manufacturing cycle will affect the working capital. Products policy will affect the working capital. Volume of sales, term of purchase and sales, operating efficiency, price level changes, business cycle, processing technology, fluctuations in supply of raw materials. So all these are the factors which affects the working capital. This is the most important question in your examination. They will ask the determinants of working capital for 15 marks. Okay, you have to write all these points. Okay, so this was the most important theory of unit 1, that is working capital management. Thank you.